the question here is, why do you think retail was able to see through? I mean, I know institutions have a fiduciary responsibility to sell, but why didn't they buy as heavy as retail?
I think it's because retail investors see this as a stock market. They're like, I like Palantir. I own Meta. Like, should Meta get killed because of tariffs? You know what I mean? Like, should Palantir get down to 80? Like, if you think about it, like, a retail investor sees it as stocks.
Right.
But the higher up you go, they're more macro. They're like, oh, Trump's going to just drive us off a cliff. You know, Fed's going to kill us. And so these actually create biases.
Right.
And then when the actual economy doesn't, or the stock market doesn't react to what their framework is, then they're like, oh, the market's insane. This is the dumbest rally.
Correct.
Only retail's buying. And so then they're caught off sides because they're now sitting on cash, institutions, on a complete full V-shaped recovery. And that's why it's the most hated V-shaped recovery.
Yeah, I mean, getting 4% in a money market while Meta's going up by 40%. How are these conversations? Because I imagine one of the reasons I was very bullish in 2023 is because you kept saying your institutional clients didn't believe in what was happening. And that was the wall of worry that you kept using to justify, no, we probably have more momentum left. When you talk with these people, do they just want to curse you out, but also at the same time, they want to say, well, thanks for letting us know it's time to buy?
Yeah. Well, compared to 2023 and 2020, the institutional universe is even more bearish.
Wow.
They're convinced we're late cycle. One thing to keep in mind is if you look at political affiliation in the equity market, 65% of fund managers voted for Biden.
I did not know that.
Yeah. So, but if you look at the bond market, it flips. The
Right.
bond market historically votes Republican.
Correct.
So most people think Trump is a madman, right? Because they didn't vote for him.
Are
So-
you saying TDS is one of the reasons why people did not buy the dip?
Yeah, we write about it a lot in our research, actually. So it's a partisan stock market. And actually, people... So these have been uncomfortable conversations that we've had all year because...
I would imagine. Yeah.
Yeah, because they're like, Tom, we can't... You're telling us not to sell. Because our advice was, don't sell. Like, even though I didn't know where the bottom was, I did know it would be V-shaped.
Right.
But they're like, Tom, we can't do that, you know? And then I was like, well, I showed the stat. Whenever the VIX is above 60 and then it closes below 30, 100% of the time it's been the bottom.
Correct.
And they're like, well, it's different because the Fed's not going to save you. So everyone found a reason to actually argue for why a recession was starting. And as you know, economists went full on recession call.
That's correct.
So if you're a equity guy, how can you go stocks are going to do V-shaped when the economist of the firm just said there's a recession? So
Right.
I think they got caught, and we're not having happy conversations with people.
Do you still think this is so you've articulated now that this is the beginning of a new bull market, and I imagine those institutional clients lose their mind when you say that. In a sort of nutshell, why is that the case?
Well, it's fact based because we had a drawdown of more than 20%, and then we made a new high. So like the weird math that like let's say a commodity trading advisor, a CTA,
right,
has is that when you have a drawdown and then you make a new high, that date is the start of a bull market.
Huh.
So actually, like in the mind of the institution now, breaking 61.41 was a new bull market.
Wow.
But the retail investor bought it at 4,800 to 61.41. But the algos are going to say a new bull market started like last week.
Do you think retail participation is net good?
Yes.
Why?
Well, there's a big transformation in the stock market today, and I actually would give credit to X, which is that the best companies have turned shareholders into customers.
Yeah.
Right. Like, I'll give you a perfect example. MicroStrategy. They've orange pilled people. Like, people own MicroStrategy not because it's a security business, but it's because Saylor is getting me more Bitcoin per share. Palantir. Alex Karp is a cult of personality.
I know a little bit about that one.
Yeah. How about Tesla? Tesla is, you know what? It's a bet on Elon. So these stocks are getting a real discount on their cost of capital because they've turned shareholders into customers. And so I think it's actually very healthy because that's the Peter Lynch thing. Peter Lynch is buy what you know. Well, someone says, like if you talk to someone who owns Tesla,
Yeah.
and you're like, tell us about, and they could tell you that Optimus Prime, FSD, literally they know the company cold. Like
Right.
they know what they're buying. Like the retail investor is pretty educated. So I think like when someone says, oh, it's dumb retail money, it's totally not true. I think retail knows what they're doing.
So a lot of the institutional guys will say, well, Tesla's at $1 trillion, PE of 200. That person that can tell you all the ins and outs of FSD doesn't understand valuation. But your argument here is, well, that person probably owns a Tesla. They have experience with FSD. They can be a little bit creative in terms of their imagination on where the company can go. And valuation might not matter as much. Is that the argument from the valuation side that says a 200 PE is crazy versus the cult member who says, I am in this car every day. You don't understand what you're talking about.
Well, let me put it this way. It's a very like cogent question you're asking. But the real second question to that is, how many people fundamentally need the PE to be the basis for an investment? It's a shrinking universe, okay? Let me put it this way. Do you own a luxury watch?
I don't.
Okay. So let's say someone has or do you have any art or something, like a collectible?
Probably not, no.
Okay. Because remember, Tesla is scarce.
I have
right?
a Tesla, though.
Yeah.
Yeah.
But see, okay, I mean, Tesla is scarce as art. Because name another company like Tesla. Like, there's electric car companies and robots, but in the world today, like go around the world, ask 8 billion people, is there another company like Tesla? We'll say, nope, there's only one Tesla.
Just one Tesla.
Okay, so that's a Da Vinci.
Wow.
Right? Think about that. It's like there's just one Tesla. And so then you say, pretend this is a Da Vinci, and like someone will say, I'm only going to value this based on the value of the wood and the string and the paper. And so the PE of this is actually 12 cents. But then like 100 people say, no, there's only one painting like this.
Right.
And I'm going to pay $100 million. That's the Tesla thing. Like some people will say, oh, Tesla's a car company, but that's a small cohort. Everyone else says Tesla's a Da Vinci, right? Like there's no other company like Tesla in the world. So shouldn't that scarcity be worth a premium?
I have never thought of it like that, quite frankly. I mean, that is the first time I've even heard that as a comparison, but it makes a lot of sense because we know Elon's brand is superseding a lot of the brands. I mean, I don't even know who the CEO of Procter & Gamble is.
Correct. I mean, yeah, who's the CEO of the biggest company that's not a tech?
Right.
We can't even name them. And another thing you could say is like, that proves Tesla has a fixed supply.
Correct.
Of one. And when it's gone, there's no other Tesla. But they have superior manufacturing. Making a car is like one of the hardest things in the world to do, and making electric, and they do it profitably.
Right.
And then look at Elon says, let's do something in space, and then he's like 90% of the space business. And then he says, let's do some AI, and then Grok is like valued at 130 billion. I mean, kind of he knows how to create businesses, and but there's only one Tesla in the world. Like Tesla company.
Right.
People might say it's a commodity, but I mean...
It's an argument that's hard to justify from that perspective outside of just using valuation. Is that why you said Tesla would lead the V-shape?
Yes. Yeah. So what we did, we created a list of what we call washed out stocks. And it's a simple exercise. We said, let's treat April 7th as the low.
Right.
Then comb through the 3,000 investable stocks that are liquid for our institutions. How many didn't make a new low on April 7th? So, and then on lower volume.
Right.
And it was like 37 stocks.
Right.
But Tesla was one of them, Palantir. I mean, it was like the list of basically what did it.
Correct.
Parabolic, yeah.
Yeah.
NVIDIA was on that list. So it's kind of what's led the bounce. It's a simple thing. Basically, we were saying these were the first things that were already puked.
Right.
So then in April, people were already done selling, so they didn't make a new low. I mean, it's kind of logical, and that was our list.
And these were the one of one brand to keep it alive. All right, Tom, thank you again for taking the time today. I want to do some rapid fire just so people get to know a little bit more about Tom. What is your favorite movie?
Oh, okay. Like, I hope you don't think these are a little dark. Okay. But like two movies that I enjoy watching a lot are The Apartment, which is Jack Lemmon, like 1960s. Shirley MacLaine. It's, I don't know, it's such a good movie. It's a little sad, but it's a great movie. And I love Lost in Translation.
I love that one too.
Yeah.
I love it.
Which But I think that's the movie where I realized, Bill Murray is genius. Like,
Yep.
because I totally believe that he was actually that person. Like, it's not him as an actor.
Right.
So,
what is your day-to-day like? Like, when do you wake up and when do you sleep, and what is happening during the day?
okay. The last couple weeks is not a good snapshot, but because last night I was in the office until almost 2, maybe 1 a.m. I got home at 2.
In meetings?
Yes, I've been in Zoom. I'm usually fully booked all day and on Zooms. And then I got up at 5:30 a.m. for CNBC.
Mm.
And as soon as I got to the office today, I've been in Zooms all day.
Wow.
So I think I'm heavily scheduled. But I do find time to comment on Twitter, especially all the haters.
And you do your own tweets, right?
Yes.
I mean, it looks like you do your own tweets.
I do. That's why
it keeps it authentic. Yeah.
Yeah, actually, so this is really important. I have plenty of people that offer to write things for me or research or the tweets, but I was like, you know what? I don't want someone to think that came from me.
Correct.
It has to come from me. So even our research, like I create a video every day for our clients.
Right.
It's about a 10-minute video, 5-minute video, and I do that, and I think it's important that I'm speaking to people directly. So research is a lot of work. I mean, that's why my hours are crazy. But of course, I have to talk to a lot of people, and we have to do a lot of research. And we're doing research by calling people and getting information. So, it's a busy schedule.
Do you enjoy and love that grind?
Yes, it doesn't feel like a job.
Which is a blessing.
Yeah, and I've been doing this for 34 years, and it's actually never felt like a job.
Mm. Do you feel like a rock star?
No, I do not. But if I had a posse, I certainly, or like a limo or security, then I would know what it's like to be a rock star.
What's your favorite city outside of New York that you travel to?
Well, my wife's from Los Angeles, so we spend a lot of time there, and I really realize it's great. It's like the weather is amazing and the food's great. But if someone said like, what's my favorite country to vacation in? It's actually Mexico. Like I like Cabo a lot. And I like Mayakoba. I mean, and yeah, so it's great.
Granny Shots, your ETF just got $1 billion AUM. Congrats on that.
Almost 1.5 billion, actually.
Wow. Well, no, you should be correcting me on that. 1.5 billion is not easy to raise. 2 companies that my audience particularly care about that are in Granny Shots. Just any quick thoughts on them? Start off with Palantir. Any thoughts on that one?
Yeah, I mean, Palantir to me is reinventing what it means for a company to have a relationship with a corporation to make them a better business. Usually that's like a consultant,
right,
or a tech company.
Right.
Palantir is both with few people. It's almost like they're getting a wizard. Palantir is like the wizard of the Fortune 500. Well, of course, the government, but look at the role they played in a lot of things that are look like magic. That's Palantir.
4,000 employees, less than 800 customers. Pretty incredible, doing about $4 billion in revenue. Second one that just became the largest holding of Granny Shots, Robinhood. Any thoughts on this one?
Yeah. I mean, Robinhood's amazing. I think it's the Morgan Stanley of this young generation. What people forget is in the 1980s, Wall Street was, this old boys network, and a few brokers were starting up for the baby boomers.
Right.
Baby boomers were in their 20s then. Yeah. And Charles Schwab was a newsletter.
Yeah.
And then he's like, well, I'll become a broker. So the brokers of the boomers, which was like E-Trade and Schwab, well, that is Robinhood today.
Yep.
So I think that Robinhood is incredibly smart. They're crypto. They have a UI that is amazing. They understand how important that is. And then they're making really smart moves. So yeah, that's why it is a granny shot.
I love it. Tom Lee, thank you for everything you do. Thank you for being the voice of retail. And thank you for the time.
Great. Thanks.
You crushed it.